Good morning. This is Myra Corrello with the Goldman Sachs 10,000 Small Businesses Program at Delgado Community College. We are so delighted to have you with us today. We are doing this as part of our 10KSB Talks, which is a series that we do on a regular basis featuring our alumni, and it is designed for our alumni. However, today we're delighted to have this one opened up to the public and have all kinds of people joining us, including alumni from other programs across the country. So if you're joining us via the announcement in the alumni app, we are absolutely delighted to have you with us. If you are a prospective alumni of Goldman Sachs, we are delighted to give you a taste of some of the great things that this program has to offer. We will be having some great programming coming up in the next months. So if you are interested in this type of programming and you'd like to make sure and receive notices, certainly keep an eye on the alumni app. The other thing you can do is you can like the Delgado Community College Goldman Sachs 10,000 Small Businesses Program on Facebook. We also have an avatar on Facebook that you can befriend, and her name is K-A-Y Esbee, E-S-B-E-E. Isn't that cute? And so if you go in and like or ask to befriend Kay Esbee, then you will be really kept up to date on things. We also are on LinkedIn and Twitter. So make sure and follow us on all those and you won't miss any of it. A couple of announcements for alumni before we get started. Alumni, we are in the process of collecting high-definition photos of you with your business because we want to be able to use that in the future on some promotional campaigns and other things. So by all means, get in touch with me, mcorre@dcc.edu. And I will be happy to give you more details, but send us a high-definition picture of you somehow doing something within your business. And we will be glad to work with you to find some cool ways to promote that. Also, we do have several newsletters, clinics, area gatherings coming up. So make sure we do have your correct email and that we are able to reach you via constant contact as one of our sources. Also, we are accepting applications for the spring 2019 cohort. It will begin on January the 22nd and will be ending on April 25th. So if you know of somebody who has an interest, please contact our office and let us know. You can always use the office email at 10ksb@dcc.edu. And now, without further ado, I want to introduce John Cresson. He's going to tell you a little bit more about himself, but I want to share with you my part. John came through cohort 18, so he's actually been out now for 2 cohorts. And his brother Rufus also came through. He came through at cohort 16. So we've been blessed with the Cresson brothers. And I got inspired to have John do this when I attended a BNI meeting where he was presenting. And not only was his presentation excellent, but it was astounding to see the number of people in that room who got up to give him testimonials and talk about how much they have enjoyed using him and working with him and benefiting from his expertise. And so that to me was a clear indicator that we needed to use him in one of these future talks. So I'm delighted that he agreed to do this. He is going to cover a lot of information in this 30 minutes. He's going to talk for about 30 minutes, and then we are going to be opening it up to questions along the way. Feel free. I'll be monitoring the chat and also the questions section. And so when he finishes his roughly 30 minutes of material, we will be on the line until 11 a.m. if necessary, covering any questions, whatever you may have. But for the meantime, we do want to give him a good 30 solid minutes of covering. So jot down your questions, feed them into the questions thing. I'll kind of moderate that at the end and make sure that they get answered. And also, because he is going to be covering a lot of things, he has graciously said that he would make available his PowerPoint, which of course is also going to be part of the recording, and we are recording this session. So I will be happy if you have been one that registered, then you will actually receive through your registration a recording of this whole PowerPoint. So I encourage you, go ahead and feed me questions as you see this. The one thing John is going to be doing with this is he is going to be staying at kind of a 10,000-foot perspective. He's going to be going broad, and our goal is to give you a checklist of questions that you really need to be thinking about. We won't necessarily be able to give you those answers in this, but it's the things that you need to be thinking about. What do I need to talk to my accountant about? So without further ado, John, I'm turning it over to you, and thank you so much for being willing to do this for us.
Thank you, Myra. Pleasure being here. I'll tell you what, when Myra said to me, we have a lot of people signed up to participate in this class, I wasn't really that surprised. I can't imagine what's more exciting than having 30 minutes of a CPA lecturing to you about all the different things in business. So seriously, though, I want to thank everybody for coming in and participating as part of this webinar series, and I'm looking forward to it. And hopefully at the end, we get a moment to chat and answer a few questions and go over some of the things that we're going on through here. So let's get going. First, I just want to mention a few things about me so you guys know a little bit about who I am. That's me there. As Myra mentioned, I am a Goldman Sachs 10KSB graduate. I've been here my whole life in New Orleans. I know we have some non-New Orleanian people on the phone, and if you haven't been here, you need to make a trip down here. I'm sure Myra would be more than happy to let you stay at her place. I am married with 2 children. I am in business with my wife. That's correct. My wife is also a CPA. You should hear our dinner conversations. They're fantastic. Something nobody knows about me. I love shopping for cars. What can I say? I'm a sucker for a haggle. I like to go ahead and do some research on what they should be bought for, and it's a game. I like to win. I like to beat the salesman. But seriously, though, no one knows that about me, so don't tell anyone. You guys are the only ones that know this. Last thing I need is hundreds of phone calls of people asking me to go help them buy cars. My time is limited already as it is. Favorite quote that I wanted to share with you guys, do or do not, there is no try, by Master Yoda. I think I'm at the point now where I get the eye roll from both my employees and my kids every time I tell them, I don't want to hear trying, just do it. So it's a fun one for me, guys. Feel free to try it out. All right, let's jump right into it. As Myra mentioned, this is just a refresher. A lot of these topics, nothing new for most of you, but I know coming out of the program, you probably had all these great intentions of all these things you wanted to do, and then you kind of put it off. So I'm hoping the goal of this webinar is that when we get through it, that some of those things will be rekindled, and you'll go and you'll reach out to your CPA and come up with questions that you want to make sure that you're discussing with him. So topic 1, is my business set up properly? Real quick, I just want to mention these are the types of businesses that most entities are. These are the more common ones. Yes, there are other ones out there, such as LLPs, LPs, associations, etc. But we're not going to get into those because those are more specialized, and probably not anybody here is going to be touching that anyway. So here's just a list of the things that you know of and you're used to. So just want these the business entities we're going to talk about here. Limited. Oh, I think I went back too far. Go back up a second. All right, I just want to mention about sole proprietorships and general partnerships. I don't really want to talk too much about these. The big thing I want to focus on is under the cons, where it says the unlimited liability to the owners. These are businesses that are not registered with the state. So if you decide to just get out and start business, but you're not, you didn't go to the Secretary of State website and set up your business that way, this is what you are, and this is how you're classified. That unlimited liability there to the owners is the main reason why most businesses should not be set up this way. So that's all I really wanted to mention about these. Other than that, if you don't have a registration with the state, that you need to go ahead and do so. Limited liability companies, there's 2 types. We got the single member and the multi-member. Right now we're going to talk about the single member. These are also the sole proprietorships. So if you're in business for yourself and you did go to the Secretary of State website and you did register your LLC and you are in business by yourself, you're sole proprietorship, single member LLC, these are the easiest way to go. This is not much to it. You've got your registration going. You earn your money. You go ahead and put it on your income taxes on Schedule C. You're done. Piece of cake, right? Problem with these entities, sometimes some people may look at, or business owners look at, is that you don't have a whole lot of tax benefit. Of course, if it's easy, you can't have good tax benefits. That's just kind of the way it goes. In fact, I'm just going to mention too, prior to the 2017 Tax Act, there was almost no benefits, but there are some new benefits that did come out. So you want to, if you are in fact set up this way, tax-wise, there's some things for you that may be available that were not there for you in the past. So it is worth some discussion there to find out what's going on with the new tax laws. And I just want to mention a few things as I'm going through here, you'll hear me mention certain aspects of tax. And while tax isn't necessarily the leading factor in the decisions you need to make as a business owner, it is in fact a decision that you need to make as a business owner. So I'm just going to kind of gloss over a few things as we go. But you don't really necessarily need to be making decisions just for the tax benefits that some businesses may offer. Rule of thumb on these entities is if you're a business that makes less than $100,000 of profit, I'm putting the emphasis on profit. And I also want to just mention this is just a rule of thumb. As all rules of thumb, there's always exceptions. So, it's not cookie cutter. It's not going to be the same for everybody. Some entities that are profiting less, there still may be a better fit for them in a different type of business. But, this is just a rule of thumb. Last thing I just want to mention, if you're a husband and wife, you're considered single member for tax purposes. All right, next up we got the limited liabilities, the multi-members. These are your partnerships. You and your neighbor, you and your buddy decide, hey, we're going to start a business together, and you go and register with the state. Your default, you are a partnership. No elections have been made. You're in business, same thing. You go file tax returns. You guys each get your share of the profits, and you go and report it on your personal income taxes. That's what you are, your partnership. Biggest advantage of these partnerships is the allocations of income and other tax relevant items. I can tell you a quick story. I had a client come in. It was a new client, and dad decided he was going to open business for his son. His son was trying to figure out what he wanted to do. So dad said, I'm going to open you up a business. You're going to be 99% business owner. I'm going to be 1%. I'm going to put up all the money. I'm going to pay you $40,000 a year to run this business. I don't want any profits. I just want my money paid back. But if the business loses money, then I'm going to get the benefit of all the losses, and you don't get any of it, despite the fact that you're a 99% owner. That's some of the flexibilities that a multi-member LLC will offer you. Everything is dictated by your operating agreement. You can manipulate what you want to do with the business through the agreements that you guys have made. So limited liability partnerships are really common amongst business owners that have more or less special arrangements that are made. Family businesses are big with them. Businesses where maybe you have some investors in your business, but they're not really participating in the business. So having these types of partnerships offer the flexibilities that you want to perhaps put into use. Just a couple other notes about it. If you have another entity, whether it's another LLC or a corporation, you can in fact be a partner in a limited liability company. It's not necessarily two individuals or multiple individuals. You can have other businesses as partners. And then like its brother, the single member LLC, your tax benefits are somewhat limited. So, but the big takeaway from a multi-member LLC or partnership is just that you have the flexibility to do what you want to do in business. Next up, we have our C corporations. This is what you think of with, these are your Apples and your Microsofts of the world, the big companies. They're taxed at the corporate level. They pay corporate income taxes. This is the only entity where the business itself does pay the taxes. However, if the shareholder decides they want to take out that money, the shareholder's also paying taxes. That's where the double taxation comes into play. So that's some negative with regards to corporations with regards to that double taxation, but it's not necessarily a bad thing for all businesses. I have a couple examples there of businesses that it would be good for. And just to give you an example, if you've got a business, say your retail store or even maybe a restaurant, maybe a manufacturing business, and your business has got $100,000 of profit, but all that profit is tied up in the inventory. You've also got $80,000 of inventory. Well, that means you've only got $20,000 of cash left over. So you're not a very cash rich business. Everything's in inventory. You're going to pay taxes at a lower level going through the C corporation, starting over with the tax brackets than you were if you were paying it all on your personal side for your taxes. So there's some good reasons behind being a C corporation. A couple things just to mention as well. These corporations, they are very complex, and you do need to make sure that you're planning and you're preparing and you know everything about what you're doing with regards to them. You want to talk to your advisors to make sure that you're doing things properly. I actually had a young lady come in. She was a new client, and she actually thought she was registering herself to be an LLC with the Secretary of State, but for whatever reason she clicked the wrong one. Didn't realize she clicked the wrong one, and we discovered, and it actually was kind of funny the way we discovered it. I asked her if she'd renewed herself with the state, and she wasn't sure, so I went and looked it up, and I said, you're not an LLC, you're incorporated. And she had no idea, and I had to explain to her what that meant, and all the monies that she took out of her business in reality would have been a tax, plus she would have had to pay the corporate tax, and her tax bill would have probably been about closer to 50% of all the money that she made. Now, it's not what ended up happening because we were able to make some adjustments to fix all that. But my point is, if she had gone on and did not know that that was what was going on with her business, she could have put herself in a lot of trouble as far as a tax standpoint. And then just want to mention, too, that moving money is difficult in corporations because there's just special rules and regulations that go along with it. Money doesn't flow very easy in a corporation. Next up, we got an S corporation. I just want to be clear: S corporation is an election. You can be an LLC or you can be incorporated. The S corporation is a piece of paper you send to the IRS. Easy peasy. You just fill it out, sign it. IRS says, "Okay, congratulations, you're an S corporation." Most businesses end up being an S corporation because of the tax advantages that are allotted to it. If you are an S corporation, you know fact that you're not paying the self-employment tax on all your income, on all your profits. So that's one of the many reasons why businesses go straight to it. They do not pay corporate tax like a C corporation does. Going back to my rule of thumb, again, just rule of thumb, not necessarily the case for everybody. The profits, if you're profiting over $100,000 per shareholder in the business, this is probably a good fit for your business because of some of the advantages and benefits that you can take care of. The only other things I really want to mention about this is how it can be a little burdensome. I actually had a client of mine come in. Someone told him that he needed to be an S corporation because of the tax benefits. So he went and set it up, did it all on his own, and when we came to look at the work, if it's a secondary business, the business wasn't making a whole lot of money. So he had to do a payroll for himself. He had to get his books set up. And with the extra return that goes along with it, the benefits that would have been there by being an S corporation are all lost in the extra costs that go along with it. So it does have to be a right fit for a business. So it's not necessarily just because it gives you good tax benefits, it doesn't mean it's right for you. And then the last thing I want to mention is its lack of flexibility. In that example with the dad who decided to open business with his son, he couldn't just decide that I'm going to take 99% of the losses even though I'm a 1% owner in an S corporation. That's not the way it works. You got to follow the different rules that go along with it. So they're not quite as flexible as a partnership. All right, so now what? Well, hopefully it was a refresher for you and reminds you about what's happening in your own businesses, and that you are the right type of business, or maybe something hit you there, struck a chord to say, wait, hold on, maybe I'm not the right business that I'm set up to be. And I do want to make that point. It's not final. Business changes daily. We know that. We've all been there. So if, 10 years ago, what was right for you may not be what's right for you presently. And same goes with what's right for you now may not be what's right for you 10 years from now. And it's not too difficult to go changing those decisions that you've made in the past, or moving forward. So just think through and check with your CPA, somewhat regularly. Say, hey, is this still the right way I want to be doing my business? Um, so yeah, are you operating properly? That's hopefully something pretty regularly that you're having that discussion. Oh, moving on. Topic 2 here. We're going to talk about, is my business compliant? My whole goal here is just to make sure that you're not being shut down by government. Government wants their piece too, and that's just a fact of business. You got to make sure that you're operating your business legally, and that you are compliant, and that you're not going to have regulatory agencies coming down on you. I know we have some people who are not in Louisiana here, so I've mentioned here, make sure you have your Louisiana ID number. I'm assuming most states are going to have their own ID numbers. Businesses will go years without even realizing that they need one. Sales tax. Again, this is a little more Louisiana specific. If you're in tune with what's happening with our legislature here in Louisiana, we've changed our sales tax laws 3 times in the last 5 years. So perhaps you were used to collecting 4%, and now you got to collect 5%. But then again, if you're in this business, you only need to collect 3%. Yeah, I know. I confuse myself as well with it. So you want to make sure you're keeping up with your sales tax. The sales taxes, they'll pop up on you. That they tend to find you. So just be sure that with what you're doing, what you're selling, even some services may be subject to sales tax, and just be sure that you're not one of those businesses that hasn't been collecting. Stay current on your income taxes. Big one I hear a lot lately, and some of you may run into it yourself. You go to the DMV, right? Go get that driver's license renewed, and they say, hey, sorry, you're behind on your income taxes. You got to get caught up, or else we're not giving you your renewal, and you're stuck, and you're driving around illegally. That's just one of the licenses that they're going after. I actually have a client currently right now. He knows it. He's bad. He doesn't want to do his taxes, and he's 3 years behind. And he went to go renew his contractor's license, and the state said, "Sorry, we're not renewing, not till we get that tax return. We need to get you all the way caught up." So don't get behind on that. It's really big. You don't want to have you can't do business without that license. So, and then I just mentioned, don't forget your occupational licenses there. Some people forget about that a good bit. They just, oh yeah, I forgot I need to do that. Just one of those little things. Payroll. Are you paying your employees properly? Bonuses, commissions. People think, hey, it's okay. It's Christmas time. I want to just go ahead and give my key employees a $5,000 bonus because I love them and they've been with me for a long time. Unfortunately, there's a few complexities there. You can't exactly just do that. You got to make sure you're still following the proper protocols that go along with doing that. So you want to stay on top of it there. IRS, don't want to create an IRS issue unnecessarily, not just for yourself, but even for your employee when they go to file a tax return and suddenly things aren't looking right, and you're getting yourself a little bit in a pickle. Pay your payroll deposits. It seems simple, but I tell you just a quick story. I get a phone call one day. Client says to me, "John, I have a lady knocking on my door. She claims to be with the IRS." I said, well, what is she saying? She's handing me this letter. It says I owe them a bunch of money. I said, send me that letter. Let me take a look at it. Fax it over. I said, oh, it's your payroll taxes. That's, no big deal. Just send it over to Paychecks. They'll take care of it for you. And she says, well, I got rid of Paychecks. Said, what do you mean you got rid of Paychecks? I said, I decided I didn't want to pay for the service anymore, so I started doing payroll myself. All right, well, no problem. Just give them the 941s. They have the 941s. So well, then what's the problem? They said they want the money. I said, well, why haven't you paid them the money? She said, well, I couldn't afford it. So she was holding the payroll taxes that she was pulling out of her employees' paychecks, and she was about 18 months behind. IRS doesn't take too kindly to that. Long story short, sadly, she's no longer in business. And it truly is a sad situation because it was a family business, and two of the family members had to end up taking out second mortgages on their house just to be able to pay off past due payroll taxes. That was honestly innocently done. If they had reached out to me sooner, we could have had the discussion and perhaps looked at other avenues on trying to make sure that they didn't put themselves in that kind of bind. So, few other things just quickly want to mention some tax credits out there. Tax credits are forever changing. There's always something new. Government is coming up with something with IRS, the state, the city or parish or counties for those of you not in Louisiana. Those things are forever coming in and out. You want to stay current on those. Make sure there's not something available for you on some tax credits that are there. And then of course the employees versus independent contractors. Are you paying your people properly? Who remembers Legal Clinic? Right? We went through this. We had the attorneys from the employment firms come out and scare the bejesus out of half the cohorts. At least they did my cohorts. I remember people standing up and pacing the hallways in Delgado because they were so worried about what was going to happen. So again, this is just kind of a refresher for you. I'm not going to go into all the specifics there. Hopefully you guys kind of remember and have already been scared straight on this. But I did just want to mention just real quick the definition of an independent contractor, which is right there for you. If you don't believe mine, go ahead and check it out on Google. You've come up with probably the same thing or something close. Just remember, in an independent contractor, you've got the control and relationship test. Yeah, I'm sure they heard the story. Walks like a duck, quacks like a duck, must be a duck, right? So at least they mentioned that in my during one of my modules there. So remember that those tests that go along with deciding whether or not you have an employee versus an independent contractor. If you're not totally convinced, you can feel free to go to irs.gov. They got 20 factors on there for you that you can go by and check all the boxes. So, what's my exposure? What am I worried about? Why do I need to be compliant and legal? Penalties. That's enough to probably scare most of you, and it should. It's I've seen it. It's unfortunate and it's sad when that's what's going to be the undoing of a business. You got to make sure you stay in compliant. I'll put on here for you guys to go back and look at. Don't let the regulatory restrictions and rules be the undoing of your business, because it can be. You can't bankrupt yourself from taxes. You can't just say, oh, well, I'm just going to go bankrupt and start a new business. It doesn't work that way. And that's all the taxes, not just income tax. And don't forget that there are other agencies out there than just the IRS. You can run and hide from IRS, but you still have the state and the Workforce Commission and your local parish compliance offices, et cetera, that are looking to make sure that you are a legal business. So if you take away one thing from this refresher, just know that the taxes do not disappear, and you want to stay compliant with everything that you're doing. All right, that concludes this topic. Let's go into the next topic, topic 3 here, which is, are my financials being prepared properly? Hopefully, like I said, some of these things are ringing a bell, and if this isn't ringing a bell, I can assure you what's coming up is about to, and that is cash versus accrual, right? Who doesn't remember that from the financial module? Most people couldn't stand this module. When I was in there, I never felt so loved, and I was hoping it was just my personality and outgoingness that had everybody flock to me, and not the fact that I ended up doing about 5 or 6 of my cohorts' homework for half of their financial forecasting. But if you remember going back to this, we heard accrual, accrual, accrual. We heard it the whole time. I'm not going to go rehash it completely for you. My goal here is just to kind of remind you of what they are. I remember it very well. Everyone coming out of the program, They said, I'm going to switch. I'm going to be accrual basis financials. And they said, I'm going to be that business owner. And I've already met with two of my fellow cohorts, and I said, all right, so you're ready to get set up for your accrual financials? I'm like, well, look, I don't know that I really need that. And the fact of the matter is, I think they kind of forgot, and I had to just kind of go through this refresher with them as to why it is we're doing what we do with the accrual basis financials. And that's kind of my goal here. So just a reminder, cash is a tax basis. That's where your expenses are recorded when you write the checks. Your deposits are recorded whenever you receive them. So, and then the accrual basis, you're matching up to the proper periods of actually when the income was actually earned versus when you are depositing the check. And then same goes with the expenses. Cash basis, reality, this is why we all do it. These three things, it's simple, and I'm going to keep it simple for you. It's easy. You pull up your bank statement, you look at the checks that you wrote, you punch it into QuickBooks, you're done. You feel good about it. It's cheap. It doesn't cost you much. And then, of course, you're going to delay some taxes on it. It's the end of the year. You don't go check that mailbox January 5th. You can't believe how much money has just been sitting there that you haven't even noticed because, you're trying to put off some of the tax burden at the end of the year. That's why we do the cash basis. But, that's really the only it's really the only reason that it is done, and we're creatures of habit. I get it, but we just got to look past it. There's really no excess benefits, and I just want to be clear too that with cash basis, even with accrual basis financials, when it comes to doing your tax returns and whatnot, you can convert back to cash basis for tax purposes. So you're not committed to that from a tax standpoint, which is what scares a lot of people. Accrual basis. This is the generally accepted basis of accounting. Big thing I want to mention here is that it's going to show the profitability over a given period. Quick story I just want to mention about some accrual basis financials. I had a client, and it was a complete happenstance conversation. We just happened to kind of bump into each other. It was actually outside of the office. And he was talking to me, and he says, I think at the end of the year I'm going to close. And I looked at him. I said, why are you going to do that? I've been to your place of business. You're doing so well. He'd been in business for 20 months, by the way. I said, I remember the first month nobody was in the store, and I mean now people they're all over the place. Why do you want to close? Why do you think that? He said, I'm just not making the money I thought I would. I made more money working for somebody else, getting a steady paycheck. It's just getting to be too rough, and I just don't think I can do it anymore. So I said, all right, hold on. Before you make any decisions, I said, go back. I want you to send me a few things. Shoot me an email. I said, pull all the invoices that are owed to you by your customers and your clients, and then give me an inventory count of exactly what's going on in your store, and then send me all the money that you owe your vendors. So send all that over to me, and I'm going to pull some things, and I'm going to look at it, and then we'll talk. And he says, all right. So a couple of days later, an email comes across. Go in, made the adjustments based on that information. Number one thing I kind of discovered based on back to some of the analytics that we had done back in Mod 3 and in the financial module, ran a few formulas there, called him up. I said, good news. He says, what's that? I said, you're not going out of business because you're making tons of money. And he says, what do you mean I'm making tons of money? I said, the problem here is you've got accounts receivable over 70 days. I said, you got to make some phone calls. You got to get people to get you that money. That's your problem. That's why you don't have any money. So went ahead, talked to his manager, made some of those phone calls, and I just want to say he finished that tax year. He reported a $32,000 profit in the second year of business. Since then, years 3 through 8, he's reported over $300,000 in taxable income on his tax return since that year. And that was all going back to the fact that he certainly made the right decision to not close his doors. He continued to grow. He continued to realize, hey, my business is making money. I just didn't know. So that's kind of what the accrual basis is going to offer for you. So I'm just going to keep it simple for you. It's just better for understanding what your business is doing. What are my financials saying? Did you know your financials talk? I can tell you right now, they do. They're going to they tell a story. They paint a picture. I have some sample questions on here for you. They're, this is where it starts to get a little technical. So maybe some of the questions that are on here are not going to apply specifically to your business, and that's okay. The only one I really kind of want to point out is the one down there at the bottom. Are the expenses high for my industry? People want to know that all the time. That information is out there. It's not proprietary. Your CPA is probably doing businesses just like yours and can go pull that information. And I know that's a big one that people want to know. The main thing I just want to point out about here is questions you should be asking yourself, and you should be asking yourself these questions. So, and it's, you just need to be paying attention to what the financials are saying and figuring those questions, and you ask yourself on a regular basis, hey, what is really happening in my business? And I just want to say, CPA speaking with your CPA on a regular basis, I'm not talking about setting up, hour meetings to go sit in his office every month or once a quarter necessarily. Sometimes it's just a phone call or an email just to say, I'm thinking about doing this. What are your thoughts on that? I want to make sure, I just want to run it by you, or I'm thinking about this, or I'm seeing what's happening here. Do you agree with this? It's just simple conversations. The door's always constantly open. That's what your CPAs are there for. That's what they want to do. I can assure you that. So as I mentioned, do you speak financial statement? It is a whole language, and you're not, as a business owner, expected to understand it. So that's where it comes to really making sure you do have that CPA that you can trust and have that business relationship. You need to, as I mentioned with the previous slide, have those conversations often. It doesn't have to be appointments, but just make sure you're constantly in the loop with what's going on. So, conclusion of it all, I just want to mention it's time for you to look at your CPA as an advisor and not just a tax preparer. Hopefully that's aside from some of the refresher that we went over today, that you really take away from this, that the CPA is someone you need to be talking to on a regular basis, that they can offer you a lot of their expertise and knowledge to help you with your business. You don't know everything with your business. None of us do. In fact, I have some other CPAs that I reach out to help me with some things with regards to my business. So it's just one of the many advisors that you need to have. So I want to thank you all again for listening to everything I had to say. I hope it was a reminder of what we did learn back when we did the program. As Myra mentioned, told her I'm more than happy to release the slides so that she can get them over to you guys. Additionally, I'm more than happy to answer any questions you guys may have or come up. Here's my information. I'll leave that up for you. Email, phone number. I'm not going to talk to your CPAs for you, but I'm happy to, help you maybe put together a question or thoughts or how's the best approach, or are these questions appropriate, that kind of thing. I'm happy to do a phone call or two just to make sure that you are feeling confident with what you need to do. So again, thank you everybody, alumni, scholars, and future scholars. Hope you enjoyed everything. And Myra, back to you.
John, yes, we do have some questions, and so I'm happy to go through those with you.
Yes,
and by all means, if any of the rest of you have questions, just click on the questions control there on your thing, and you can type it in there, or you can send it to me by chat. Either way. One of the questions that has come up is from Amber, and she asked, where would we look for tax credits?
Well, there's all kinds of places to look. Hopefully you're outsourcing your payroll, and by outsourcing, I'm talking about using third-party administrators, Paychex, ADP, those guys may have some local ones. If you're in this area, we had Crescent Payroll that went through our cohort. Um, those are great resources. They're very in tune with what's going on. They would know a lot about what's happening. Unfortunately, there's not one specific place that I would know of other than them, because economic development may have some. The state's got their own. IRS has some. So there's you kind of have to go a little all over the place. Um, I would even probably actually just do a quick Google search too on what's your industry, and say if for example you develop websites, and just tax credits for web designers. There actually is some technology credits that are out there that may be applicable to what you're doing in your business.
I think you brought up something that's really important, and that is it's amazing what we can learn from Google. And of course, we talk about that so much in the cohorts. If you are, let's say, a professional services firm, being able to hop on Google and say, what financial ratios should professional services firms monitor? Something like that can really be a tremendous help to you in understanding. And we do have some more great questions coming, so I'll go ahead and share with those with you. Ahoy asks, what are the characteristics of a good CPA? We've had one before, but they've made careless errors.
I think the main characteristics you should focus on is, in my opinion, is responsiveness. If you're seeing your CPA once a year and it's, hey, I'm here to drop off my taxes, and shop is closed from April to December, and can't get in touch with them and doesn't respond to emails, it may be time to start shopping for someone new. And that even does go with regards to some of these careless errors. A lot of it can be avoided just by having the conversation of, really making sure that numbers are looking proper and as they are. I mean, a CPA should be able to look at indicators, just even or just comparisons, I should say, where hey, your payroll is almost double what it was in the prior year. Did you hire someone new? And you say, no, I didn't hire anybody new. What's going on there? So, just being sure that you're staying in touch and in constant communications, and that you are getting the responsiveness, I think is really the key focus with your CPA. In addition to, I don't know what's going on here. I hear it sometimes, and it's kind of, I kind of raise my eyebrows a little bit. But I've actually had people tell me that their CPAs will almost yell at them, and I kind of give them a crooked eye, and I said, well, "What do you mean they're yelling at you?" Like, "Oh, he doesn't like when I do this." That's not healthy. You need to make sure that you and who your advisors, like I said, that's my key focus here, advisor. That your advisor, that those lines of communication are open, and you guys can have good communication in chats or emails and whatnot. So that's certainly top qualities that I would be looking for when you are, in fact, interviewing a CPA or and debating whether or not it's time for you to look at somebody new.
That's fantastic. Also, Alexander is asking, can you go back to the 5 questions to ask your CPA again?
5
that particular
questions.
slide.
Mm-hmm. Let's see. Let me go back here. Let's go. Let's see. Slide. Current slide out. Let's see. Let me.
You probably can just go backwards or forwards.
I'm trying to see where I had that one. It should be coming up.
And also, while you're looking for it, Mario was making a great comment, and that is, he said that he too is a CPA, and that in his cohort he was definitely highly popular and was also equally flogged.
Yes.
So yes, that's for people who have not been through this program. It's
I'm
an
sure Mario's a
extraordinary
friendly guy
opportunity.
too. That's exactly why.
And also these questions are so important, John. I'm glad that Alexander brings this up because what they call this, for those of you that maybe haven't been through the program yet, it's called ratio analysis. It's kind of the technical term for it. And essentially, what we do in the program is for this particular workshop, you're actually put with people who are just like you in your same industry. So all of our restaurant people are all at one table. And what we do is we actually have you bring in your NAICS code, which of course is the number that represents the type of business you are. And we run a specialized report for you, which really helps you to understand where you are related to other, let's say, restaurants of your size when it comes to how fast you're turning over your inventory, how liquid you are, so many of these things. And so a lot of it, and the reason John didn't go into a tremendous amount of this, is it's very specific to industry and even to your business to some degree. But this is by far one of the most important parts of not only the program, but what John is talking about here. So learning which ratios for your business that you need to be monitoring is a really important thing. And you can even Google that. It's called ratio analysis. And John, just kind of, if you can, off the top of your head, we have a lot of professional services people here. We have some retail, and we have some maybe hospitality, restaurant. What are some that you think don't get the proper attention sometimes?
You talk about the ratios?
Yes.
Well, I think a big one is the accounts receivable in days. That's such a huge one
Yes.
for a lot of businesses, and it's usually one of the first ones I kind of run to because most small businesses, I think that's where they really feel that that they're struggling because they don't have the cash, and they discover no, I do have cash. I just, my clients haven't paid me yet, and so and a lot of people, it's just kind of human nature for, I think, a lot of people. They don't want to seem confrontational and make that phone call to say, hey, you owe me money. But it's just, as a business owner, that's something that we just have to do. So that's obviously a huge one. Big one for restaurants and a lot of retail businesses. Your profit margin, your net income divided by sales. There's especially in an industry like restaurants, it's pretty cut and dry as far as where you should be with regards to that. So you need to make sure that you are pretty close, because the percentages can be so tight in a lot of industries that, if you're 1 or 2% off, now this is specifically restaurants, that could be a big thing where you need to adjust what you are doing in business. Now, obviously, some other businesses, being 1 to even 3% difference isn't that big of a deal. So those are a couple of ones. Like I said, I really love the accounts receivable in days. That's one of my
Yes.
favorite
Totally
ones
agree.
to get onto. And then everything else, it's it really just depends on the business itself and what's where the needs are. I mean, it's
I think you're right. Well,
you know
we are just so delighted you did this. If you want to put if you want to scroll back down to your contact information one more time, and I will make sure that all of you do receive a copy of this recording so that if you want to play it back, you'll have it. And as I mentioned before, make sure that you look us up on social media and so that you can follow with us. And we look forward to introducing the next 10K SB Talks very soon. So, John, thank you so much for this. We so appreciate your generous offer to even be able to follow up with anybody who has some simple questions. And I certainly hope this has been beneficial. And thank you so much for tuning in, everyone.
my pleasure. Thank you, Myra. Good luck,
All right.
everybody.
Everyone take care. Have a great day. Bye-bye.